If you are currently enrolled in Medicare and your income dropped at any point in 2024, because you retired, because you sold your home, because you lost a spouse, because your business slowed down, or because any other life event reduced what you were earning or receiving, I need you to watch this complete video today. Because the Social Security Administration is currently charging you a Medicare Part B premium that is based on income you no longer have, and there is a specific federal form that allows you to appeal that charge and recover between $2,400 and $5,100 in premium overcharges. And the overwhelming majority of Medicare enrollees who qualify for this refund have never been told the form exists, have never been shown how to file it, and will never receive a single dollar back because they will miss the appeal deadline without ever knowing there was one. I want to be completely transparent with you from the first moment of this video. What I am describing is not a loophole. It is not a gray area. It is not something that requires a lawyer or a financial advisor or any special expertise to access. It is a federal appeals process that exists specifically for Medicare enrollees whose income has decreased. It is administered directly by the Social Security Administration, and the form at the center of it, Form SSA-44, is a publicly available document that you can download, complete, and submit yourself. The reason most people never use it is not that it is difficult. The reason is that no one tells them about it. Medicare does not send you a letter explaining that your premium may be too high. SSA does not call to inform you that your income change qualifies you for a reduction. The burden of knowing this process exists and initiating it before the deadline falls entirely on you, and after today, you will know exactly what to do. Stay with me through the end of this video. The final section of this video contains the single most time-sensitive instruction, the specific deadline calculation that determines whether your appeal is processed or permanently closed. If you leave before the end, you will have the background but not the action step that makes everything else matter. Stay until the end. I want to begin by explaining exactly how Medicare Part B premiums are calculated, because understanding that calculation is what makes the appeal process make sense, and what makes the overcharge problem so common and so costly for people in your situation. Medicare Part B covers outpatient medical services, doctor visits, lab work, preventive care, durable medical equipment, and a range of other services that most Medicare enrollees use regularly. Every person enrolled in Medicare Part B pays a monthly premium for that coverage. For most enrollees, that premium is a standard base amount set annually by the Centers for Medicare and Medicaid Services. In recent years, that base premium has been in the range of $170 to $185 per month. For most people, that is the number on their statement every month, and they give it little thought. But here is where the problem arises for a significant portion of Medicare enrollees. Medicare Part B uses a surcharge system called IRMAA, the Income-Related Monthly Adjustment Amount, that adds additional premium charges on top of the base premium for enrollees whose income exceeds certain thresholds. These thresholds are tiered. As your income rises above each threshold, your monthly premium increases by a specific surcharge amount that can range from approximately $70 per month above the base premium all the way up to more than $400 per month above the base premium at the highest income tier. The critical detail, the detail that creates the overcharge situation I am describing in this video, is that Medicare does not calculate your IRMAA surcharge based on your current income. Medicare calculates your IRMAA surcharge based on your income from 2 years prior. In 2026, Medicare is using your 2024 tax return to determine whether you owe an IRMAA surcharge and how large that surcharge is. In 2025, it was your 2023 return. The system always looks backward 2 years because that is the most recent tax return SSA has access to when it sets your premium for the coming year. For the majority of Medicare enrollees, this 2-year lookback creates no problem because their income is relatively stable from year to year. But for a very large and very specific group, people who experienced a significant income reduction at some point in the past 2 years, the 2-year lookback creates a serious and ongoing financial problem. because Medicare is using their higher prior year income to calculate a surcharge they can no longer afford, and that no longer reflects their actual financial situation. Let me give you a concrete example so this is completely clear. A woman retires in January 2024 after a long career in which she was earning $95,000 per year. In 2024, because she worked the first month of the year before retiring, her total 2024 income was approximately $8,000 in wages plus whatever pension or Social Security she began receiving. Let us say her total 2024 income was $42,000. That is a dramatic reduction from her prior year income. But when Medicare sets her Part B premium for 2026, it looks at her 2024 tax return and sees $42,000, which may still be above the IRMAA threshold for her filing status, or may be below it depending on the specific threshold that applies to her. Now consider a man who sold his primary home in 2024, generating a capital gain that pushed his 2024 income to $210,000, well above multiple IRMAA thresholds. In 2026, Medicare is charging him a premium surcharge based on that $210,000 income figure. But in 2025 and 2026, he has no capital gain income. His actual income has returned to $58,000 per year. He is being charged a premium based on an income event that was one-time, non-recurring, and that does not reflect his current financial reality in any way. This is entirely preventable. The appeal process exists precisely for situations like these. But the appeal must be initiated by the enrollee. SSA will not initiate it on your behalf. Medicare will not flag your account for review. The surcharge will continue to be deducted from your Social Security check or billed to you directly every month indefinitely until you file Form SSA-44 and request a new income determination based on your current or more recent income. I want to now walk through this in 3 specific sections, covering 3 distinct groups of Medicare enrollees who are most likely to be affected by IRMAA overcharges, and who have the strongest grounds for filing a successful SSA-44 appeal. I want you to identify which group describes your situation, because the documentation you need and the specific argument you make on your form are slightly different for each one. The first group is Medicare enrollees, who retired in 2023 or 2024, and whose work income dropped significantly at the time of retirement. If you are in this group, the situation is this. Prior to your retirement, your annual earned income, wages, salary, self-employment income, was high enough to place you in one of the IRMAA surcharge tiers. After your retirement, your earned income dropped to 0 or near 0, and your income shifted to Social Security benefits, pension payments, retirement account withdrawals, and possibly part-time work. Your total post-retirement income is likely substantially lower than your pre-retirement income, and it may fall below the IRMAA threshold entirely, meaning you should be paying only the base Medicare Part B premium with no surcharge at all. But because Medicare is using a tax return from 2 years prior to set your current premium, you may be paying a surcharge that reflects your pre-retirement income rather than your post-retirement income. Depending on how large that income drop was, the surcharge you are currently paying may be 1 tier too high, 2 tiers too high, or you may owe no surcharge at all and be paying one nonetheless. Here's the specific life-changing event that qualifies you to file Form SSA-44 in this situation. The SSA-44 appeal process is built around what Medicare calls a life-changing event, a defined list of circumstances that are recognized by SSA as valid grounds for requesting a new income determination based on more recent information than the 2-year-old tax return currently being used. Retirement is explicitly listed as a qualifying life-changing event. If you stopped working or significantly reduced your work hours in 2023 or 2024, that retirement qualifies you to request that SSA use your estimated current year income, or your most recent year's income if it is lower, and instead of the 2-year-old figure currently driving your surcharge. The documentation you will need for this group includes a completed Form SSA-44, which you can download at ssa.gov or obtain at any local SSA office. You will need to provide a description of the life-changing event, specifically the date you retired or reduced your work, and an estimate of your current modified adjusted gross income for the year Medicare should use in its new calculation. You will also need to provide supporting documentation for that income estimate, which in most cases means a copy of your most recent tax return if it reflects the reduced income, or a signed statement and supporting financial documents if you are estimating current year income that has not yet been reported on a tax return. Your action if you are in this first group is to download Form SSA-44 from ssa.gov immediately. Complete the form using your retirement date as the qualifying life-changing event and your current estimated annual income as the new income figure for SSA to use. Submit the completed form with your supporting documentation to your local SSA office. Find the address at ssa.gov/locator via certified mail with return receipt, or deliver it in person and request a date-stamped receipt. Call 1-800-772-1213 to confirm SSA has received your form and that it has been entered into active processing. The premium reduction, if approved, will be applied to your Part B premium going forward, and any overpaid premiums from the month since your qualifying life event may be refunded, depending on the timing of your appeal. The dollar amounts in play for this group are significant. A person whose retirement dropped their income from the second IRMAA tier to below the base threshold could recover a premium reduction of approximately $220 per month, $2,640 per year. A person dropping from a higher tier could recover $350 to $430 per month, between $4,200 and $5,160 annually. That is real money being deducted from your fixed income every month for a surcharge that is legally and factually no longer justified. The second group I want to address is Medicare enrollees who experienced a one-time income event in 2023 or 2024 that artificially inflated their reported income for that year. Specifically, the sale of a home, the sale of a business, a large retirement account distribution, or a one-time legal settlement or inheritance that was reported as taxable income. If you are in this group, your situation is in some ways the most straightforward case for an SSA-44 appeal, because the income that is driving your current IRMAA surcharge is genuinely non-recurring. It happened once. It will not happen again. And Medicare is using it to charge you a premium surcharge every month this year and potentially next year as well. A surcharge based entirely on money you received once and will never receive again. The SSA-44 process recognizes this situation explicitly. The sale of income-producing property, which includes the sale of a primary residence, a rental property, or a business, is listed as a qualifying life-changing event for IRMAA appeal purposes. If you sold a home or a business in 2023 or 2024, and the resulting capital gain pushed your reported income into an IRMAA surcharge tier, you have grounds to file an SSA-44 and request that SSA use your current year income, which does not include that one-time gain, as the basis for your premium calculation instead. Here is where the problem arises for many people in this group. They see the capital gain on their tax return. They see the higher Medicare premium notice arrive, and they assume the higher premium is simply the cost of having had a good financial year. They do not know that the premium is recalculated annually. They do not know that the one-time income event that drove the surcharge can be specifically excluded from the calculation used for future years. And they do not know that filing a single form can eliminate the surcharge entirely for the current year. Some people in this situation pay the inflated premium for 2 full years, the year the surcharge first applies and the following year, before their income finally cycles off the IRMAA calculation. Over 2 years, that unnecessary surcharge can total between $3,400 and $10,000 depending on which tier the one-time income pushed them into. I want to be completely transparent about what the SSA-44 process does and does not do in this situation. The form allows you to request that SSA use a more recent tax year's income than the one currently being used, specifically a year in which the one-time income event does not appear. If your 2022 income was $62,000 and your 2023 income was $280,000 due to a home sale, and your 2024 income has returned to $65,000, you can file an SSA-44 requesting that SSA use your 2024 income, $65,000, and as the basis for your 2026 premium calculation instead of your 2023 income of $280,000. If $65,000 falls below the IRMAA threshold for your filing status, your surcharge is eliminated entirely. If it falls in a lower IRMAA tier than the 2023 income placed you in, your surcharge is reduced to that lower tier level. The documentation you need for this group is a completed Form SSA-44 identifying the sale of property as the qualifying life-changing event, a copy of your most recent tax return showing your current income level, in this case your 2024 return if it reflects the lower income without the one-time gain, and in some cases documentation of the property sale itself, such as a closing statement or settlement sheet. Call 1-800-772-1213 to speak with an SSA representative about your specific situation before you submit, and ask them to confirm which tax year they will use if your appeal is approved. That confirmation will tell you exactly how much your monthly premium will decrease and allow you to calculate the annual savings before you complete the form. The third group I want to address is Medicare enrollees who lost a spouse in 2023 or 2024 and whose filing status changed from married filing jointly to single as a result of that loss. This group faces a specific and largely invisible IRMAA problem that I want to explain carefully, because it affects an enormous number of widows and widowers, and it is almost never discussed in the context of Medicare premiums. The IRMAA income thresholds are not the same for single filers and married filers. The threshold at which a married couple filing jointly begins to pay an IRMAA surcharge is significantly higher than the threshold for a single filer. This means that a surviving spouse whose combined household income was within the married threshold in the year they were filing jointly may find that the same or similar income, now reported on a single return, exceeds the single filer threshold and triggers an IRMAA surcharge for the first time. Here is a specific example. A married couple filing jointly had combined income of $190,000 in 2023. For a married couple filing jointly, the first IRMAA surcharge tier begins at a significantly higher threshold, so they paid only the base Medicare Part B premium. One spouse passed away in early 2024. The surviving spouse's 2024 income, now reported as a single filer, was $112,000. For a single filer, $112,000 exceeds the first IRMAA threshold, which triggers a surcharge of approximately $70 per month. That surcharge appears on the surviving spouse's 2026 Medicare premium notice. She is now paying $840 per year in additional Medicare premiums, not because her income increased, but because her filing status changed due to the death of her spouse. The death of a spouse is a qualifying life-changing event under the SSA-44 appeal process. A surviving spouse in this situation can file Form SSA-44 identifying the death of their spouse as the qualifying event and requesting that SSA recalculate the IRMAA determination using income and filing status information that accurately reflects their current situation rather than the combined married filing jointly income from 2 years prior. Additionally, for many surviving spouses, the loss of a spouse also results in a direct income reduction. The loss of the spouse's Social Security benefit, the loss of the spouse's pension income, or the reduction of household investment income. If the surviving spouse's own income in 2025 or 2026 is lower than the income reported on the 2023 or 2024 joint return, the SSA-44 can request that SSA use the current lower income figure as the basis for the premium calculation, which may reduce or eliminate the IRMAA surcharge entirely. I want to say this directly for every widow and widower watching this video right now. You are managing one of the most difficult transitions a person can face. You are dealing with grief, with the administrative complexity of settling an estate, with changes to your Social Security and pension income, and with the challenge of rebuilding your financial picture as a single person. The last thing you need is to be quietly overcharged for Medicare premiums on top of all of that. This appeal process exists to protect you specifically. Filing Form SSA-44 is not complicated, it does not require a lawyer, and it can put hundreds of dollars per month back into your budget permanently. Do not assume the premium you are paying is correct simply because it arrived on an official Medicare notice. Verify it. Appeal it if your income has changed. That is exactly what this process is designed for. Your action if you are in this third group is the following. Download Form SSA-44 from SSA.gov. Identify the death of your spouse as the qualifying life-changing event and provide the date of that death. Provide your current estimated annual income as a single filer as the new income basis for your premium calculation. Attach your most recent individual tax return if it reflects a lower income than the joint return SSA is currently using. Submit to your local SSA office via certified mail. Find the address at ssa.gov/locateri and call 1-800-772-1213 to confirm receipt and active processing of your appeal. Before I move to the action summary, I want to address one question that comes up frequently in the context of IRMAA appeals, because the answer affects the timing of every action step I have described. The question is, what is the deadline for filing an SSA-44 appeal? Here is where most people make a critical error. They assume the deadline is annual, that they have until the end of the year or until tax filing season or until some other broad calendar deadline to submit their appeal. That assumption is incorrect and it costs people money. The operative deadline for an IRMAA appeal is 60 days from the date of the Medicare Premium Determination Notice. That is the official letter SSA sends you, typically in the fall of each year, though it can arrive at other times if your premium is being adjusted. That states your Part B premium amount for the coming period and explains that an IRMAA surcharge applies to your account. The date printed on that letter is the start of your 60-day window. If you do not file Form SSA-44 within 60 days of that date, your right to appeal for that determination period closes. You can still file for future periods, but you cannot recover the premiums charged during the period for which the appeal window has closed. I want to be completely transparent about what this means practically. If you received a Medicare premium notice in October or November of last year and you have not yet filed an appeal, you may already be outside the 60-day window for that specific determination. However, if your income situation has changed since that notice was issued, you may be eligible for a new determination based on a new qualifying life event, which opens a new 60-day appeal window. Call 1-800-772-1213 and explain your situation to an SSA representative. Ask them whether a new qualifying event has occurred that would allow you to file a current SSA-44 with a fresh appeal period. Do not assume you have missed your opportunity without first confirming that with SSA directly. If you have received any Medicare premium notice in the last 60 days, meaning any correspondence from SSA that states your Part B premium amount and references an IRMAA surcharge, your window is open right now and you need to act immediately. Do not wait until next week. Do not put this on a list of things to do later. The window is measured in days, not months, and it does not extend because you were busy or because you did not know about it. Share this video right now with every person you know who is on Medicare and who has experienced a retirement, a home sale, a major income change, or the loss of a spouse in the last 2 years. These are the people most likely to be overpaying their Medicare premium right now without knowing it. They are not going to receive a letter from SSA explaining that they qualify for an appeal. They are not going to be told by their Medicare plan. They will find out only if someone brings this information to them. Share this video and be that person for someone in your life. If this channel has been useful to you today, please subscribe using the button below this video. We cover Medicare changes, Social Security updates, IRS rules for seniors, and benefit corrections every single week. Subscribe now so you are never the last person in your circle to know about a rule that affects your check or your premium. I want to now bring everything together with a complete action summary for each of the 3 groups covered in this video. If you retired in 2023 or 2024 and your income dropped significantly at retirement, your action is this. Download Form SSA-44 from SSA.gov. Identify retirement as your qualifying life-changing event. Provide your current estimated annual income as the replacement figure for SSA to use. Attach your most recent tax return if it reflects the reduced post-retirement income. Submit via certified mail to your local SSA office, found at ssa.gov/locator. Call 1-800-772-1213 to confirm receipt and processing. The annual premium reduction you may recover ranges from $2,640 to more than $5,100, depending on which IRMAA tier your current income removes you from. If you sold a home, a business, or any income-producing property in 2023 or 2024, and that sale generated a one-time capital gain that inflated your reported income for that year, your action is this. Download Form SSA-44 from ssa.gov. Identify the sale of income-producing property as your qualifying life-changing event. Provide your current year income, without the one-time gain, as the replacement figure. Attach your most recent tax return showing the lower current income and your closing statement or settlement sheet from the property sale. Submit via certified mail and call 1-800-772-1213 to confirm active processing. If you lost a spouse in 2023 or 2024 and your filing status changed from married filing jointly to single, your action is this. Download Form SSA-44 from ssa.gov. Identify the death of your spouse as the qualifying life-changing event and provide the date. Provide your current estimated income as a single filer. Attach your most recent individual tax return. Submit via certified mail to your local SSA office and call 1-800-772-1213 to confirm the appeal has been entered into the system. For all 3 groups, the deadline is 60 days from the date of your most recent Medicare premium determination notice. Write that date down, count 60 days forward from it. That is your hard deadline. If you are within that window right now, act today. If you are outside it, call 1-800-772-1213 and ask whether a new qualifying event allows you to open a fresh appeal period. The contacts you need are these. Form SSA-44 is available at ssa.gov. Your local SSA office address is at ssa.gov/locator. The SSA direct line is 1-800-772-1213, available Monday through Friday between 8 a.m. and 7 p.m. Eastern. Wait times are shorter before 10 a.m. and after 4 p.m. Your personal Medicare premium history and benefit record are at ssa.gov/myaccount. Before you close this video, take 30 seconds and share it with someone on Medicare who retired recently, sold their home, or lost a spouse. You do not need to explain anything to them. Send them the link and tell them their Medicare premium may be too high and this video shows them how to fix it. That 30-second action on your part could put $2,400 to $5,100 back in their budget this year alone. Subscribe to this channel now if you have not already. Use the button below this video. Medicare premiums, Social Security benefit rules, and IRS guidelines for seniors are all changing in 2026, and the updates that cost people the most money are always the ones that arrive without a clear announcement. We cover every one of those updates every week. Subscribe so you never miss one that affects what you pay or what you receive. The form is SSA-44. The phone number is 1-800-772-1213. The website is ssa.gov. Your 60-day window is measured from the date on your premium notice. Do not assume your Medicare premium is correct. Do not assume SSA will contact you if it is wrong. Check the notice date, count the days, download the form, and file it before the window closes. The money is there. The process is available. The only thing standing between you and a lower premium is whether you act before the deadline. Act today.